All right, we are live again, and I can see people are joining us. Very good. Welcome to the second speaker of the day, Simon Barnby, CMO of Archax. He will be talking to us about the Archax perspective on tokenization industry trends and future directions. Please take the stage, Simon.
Hi, thanks very much for the introduction, and good afternoon everyone from London. Very pleased to be here today and to talk to you. I'll give you some thoughts around how Archax see the world of tokenization and what may be happening. I've got a few slides to run through, so I'm going to set that up first, and then hopefully you can see my screen. So I guess it was interesting listening to what Tim was saying. A lot of what he said resonates with how we see things at Archax and how we see the markets evolving. For those of you that don't know much about Archax, we're sort of building a regulated ecosystem, sort of building which is a bridge between, I guess, the new crypto world and some of the things going on there in the more traditional institutional financial market space. But I'll loop back to a little bit about Archax towards the end. What I was asked to do today was look at some of the trends and future directions that we see, and to do that I've kind of chosen 6 areas to have a talk about. Really, the first 3 are sort of some of the benefits that we see coming. I know Tim has touched on some of these in the first speech, but disruption of traditional markets to improve things, the democratization of investment and capital markets globally, and improved accessibility, both from the investment side and from the corporate side. The next 2, interoperability and regulation, are, I guess, some of the challenges that exist, particularly when you kind of look at a global marketplace. So I'm going to have a look at those 2, and then finally just touch on DeFi, because there's obviously a lot of interesting activity happening there at the moment. So the first of those, disruption. I mean, you only have to look at other segments of industries that to see where digital disruption has really caused, complete transformations of their worlds. Some of these very obvious, Netflix and Spotify changing the way we consume videos and music, Uber and Airbnb changing the ways we travel around and stay in places, and Amazon in particular transforming the sort of the high street and the high street marketplace for retail and shopping. In the pandemic over the last sort of 12 plus months, applications like Zoom and DocuSign have come to the fore, totally transforming the way that we work and, opening up new ways of working. But in terms of financial markets, in some respects, the transformation hasn't happened yet. I mean, they've been electronic for a long time, but they're not natively digital. And I think that's where we see, the excitement around tokenization and the benefits it can bring. And it is genuinely a quadrillion-dollar opportunity.
Simon, yeah. Do you hear me? I'm getting some private messages from people private messages from people in the audience asking if you can make your slides full screen. Apparently, it's quite small for them to see. I think you have to first turn off sharing and then go full screen and then turn it back on. So like when you present your slides on a big projector, you have to just full first and then.
Okay, hang on, let me go full screen.
Yes, presentation mode, please, is what people are saying. They can't see the slides.
Oh, okay. Hang on one second. Sorry, I'll let me try.
It's coming, people. Hang on.
Sorry about that.
No, that's quite all right.
Is that full screen now?
No, we still can see like the entire PPT. It's down in the bottom of your slide. You have to go to the present button.
It's in presenter mode.
I don't know how else to explain it then. Moving your mouse down. Move your mouse down, and then to the right, and then over by the turn up presentation size, and then you're right there. The first button right next to the size. That one, yeah. Can we click it?
Okay.
No, it didn't work. Okay, we have to live with it the way it is apparently.
Okay. Well, sorry
Sorry,
about
we
that.
tried. Yeah, we tried.
Okay. Um, yeah. So as I was saying, a huge opportunity for in financial markets, and I think it's worth probably just looking a little bit at the different types of crypto assets and digital assets and how they compare to existing financial instruments. I mean, in the traditional securities world, for example, they markets tend to be local. They tend to trade normal business hours, and the post-trade processes are relatively slow and inefficient with multiple parties involved, which can be a bit of a challenge. Along came crypto, which kind of revolutionized things, global marketplaces, trading 24/7, super fast and efficient, and then the advent of digital securities or security tokens that kind of blend some of the benefits of both those together. So regulated instruments, but the concepts of 24/7 trading and global markets becoming established. Um, but why tokenization? Well, I mean, I think there's a number of reasons. I mean, it opens up all sorts of benefits. I mean, particularly around raising capital, new channels for businesses to raise capital from a broader global investor reach, a more flexible way of raising capital, giving investors an exit route with the potential of secondary markets, and a cost-effective when you compare to other sort of more public routes like IPOs. So a sort of an improved and more efficient way of raising capital for SMEs in particular. And for investors, it's the ability to access new asset classes or asset classes that are currently hard to trade or relatively illiquid, helping with liquidity for those. And we've seen all sorts of interesting use cases here from the more common ones may be tokenizing equity and debt, tokenizing real estate, tokenizing funds, but then all sorts of new and interesting things. I mean, portfolios of racehorses, art, wine, even container ships. I think all sorts of digital securities and tokenization are allowing people to innovate and look at all sorts of new and interesting ways of providing access to interesting asset classes, but also opening up the ability for people who own assets to realize value from them in interesting ways. And the democratization piece is key. I think providing people with easier access to global investment opportunities is really exciting. Real benefits in the private space. The private company space is enormous compared to public markets. So sort of opening that up in a new and interesting way through tokenization is a great benefit. And then the potential tokenization of traditional securities. I mean, often sort of think about the existing shares like Berkshire Hathaway that are $200,000 or $300,000 a share. Being able to create fractional ownerships of those kind of instruments can open up all sorts of new interesting possibilities for investors, and also giving people the ability to trade 24/7 existing shares that trade on sort of regulated traditional markets, but only in sort of normal business hours for their particular region is quite interesting too. And finally, efficiency gains, and I'll touch on this in a minute, but we believe that there's all sorts of potential gains that will come, particularly in the post-trade space. But I'll come back to that in a second. But this disruption is kind of underway. I mean, you only have to look at various different areas where digital is really beginning to deliver benefits. I mean, the traditional exchanges like SIX, like Tim was saying, are looking at digital models now. ICE creating the backed market, ourselves at Archax, launching an FCA-regulated exchange for digital securities and crypto. Growth in the whole custody area, embracing digital brokers that are focusing in on the digital world, and even digital banks. And it will start to happen in other areas too. I mean, we certainly sort of the areas of the more traditional brokers embracing digital. We're seeing that already, and then it'll be interesting to see what happens with other parts of market infrastructure like CSDs. But just as an example on that sort of the benefits, particularly in post-trade, I mean, if you look at the way traditional markets trade currently, an investor typically using some kind of a trading platform and through a broker trades on an exchange, one side buying, one side selling. But what happens after? Hello, yeah?
Yeah, now
Yes, yeah, hi.
apparently your slides are not moving. Can you close down the present to audience and then open it up again? It seems that when you change slides, they're just not moving. Okay, now they're working again.
Oh, okay.
Okay, thank you. Sorry about that. I'm sorry, everybody, for the problems in this platform. We are definitely going to send a long-worded complaint about it. And so we apologize for the user experience right now. Please continue, Simon. It was so interesting.
Okay, can you see the screen?
Yes.
You can see the slides, yeah?
Yes.
Okay. As I was saying, what actually happens after the trade is, it looks relatively orderly here, but there are a lot of intermediaries, a lot of parties involved, from custodians and administrators through to CSDs and clearinghouses and registrars and the like. And although it looks fairly orderly, in reality, what happens is, everyone's got their own books and records. There's a lot of reconciliations that need to take place, and so it's actually quite a complex process. Can be quite time consuming, and it's relatively inefficient and can be costly too. Along came crypto, and in that unregulated world where everything happens on the exchange, it's all very simple. You trade, clear, and settle, and that's the end of it. You don't have that whole post-trade process in place. And I guess one of the sort of benefits that everyone wants to see is from digital securities and tokenization is to bring those benefits through to sort of traditional regulated markets too. But obviously right now, regulations dictate that many of the intermediaries, many of the other parties have to be involved, and so you end up with a market like Archax, which may be digital, but the post-trade processes still exist. However, we certainly believe that once, and this will take time, but it will come. Once you move everything onto a blockchain and everyone has a node on that chain, then every time a trade takes place, the transmission of data goes out across the blockchain, across to all the nodes. Everyone gets the same trusted source of information, and it can actually really streamline post-trade, remove friction, and reduce cost. So an example of some real benefits from the in the post-trade space. Another example maybe is corporate actions. If you kind of see what happens in the current world, typically there are intermediaries, prime brokers, custodians. You've got shareholders who need to vote. Typically, there is a window of where the voting has to be completed, and often those investors actually want to leave it to the last minute before they cast their vote, but they can't because the intermediaries have a window for them, which is a shorter window than the issuer provides, and so it's not as efficient as it could be. But in the digital world, with a market like Archax, and the benefits of having token holders and blockchain technology means actually you can connect directly to the shareholders and they can vote directly to you as the issuer. Similarly with dividends and income, at the moment you're again distributing it through other intermediaries. It's got to go through the banking system, so it's complex and costly and takes time. Again, with things like stable coins and leveraging the records that you have on blockchain, again, it can be done in a much quicker, seamless, and much more efficient and less expensive way. Similarly, looking at sort of the tokenization of funds. I mean, if a fund manager has a fund that's invested in assets, maybe real estate, and one of those investors wants to reduce their holding, wants to take some money out. If there's no free cash available, then some redemption may need to take place. The portfolio needs to be rebalanced. An asset may need to be sold, or a part of an asset, to actually fund the request for them from the investor. That means the portfolio managers are distracted. They've got fluctuating fees. It's not as streamlined and easy as it could be. But bring in tokenization and tokenize the fund, have those tokens traded on a secondary market. You're effectively creating a permanent source of capital for the fund, which is fantastic. If people want to redeem, they can go to the secondary market and redeem that way without impacting the fund at all. And so that investor can actually get the money that they want without affecting the fund at all. A final example maybe is just, looking at tokenization in its broadest sense. It's not only directly beneficial to financial markets, it's beneficial in other areas too. I mean, AML KYC is quite interesting. In the old world, this was often done with wet ink signed documents that are mailed around and notaries approving things. It wasn't particularly efficient, and it certainly took time. Things have obviously got better. Everything's mostly done electronic now. A lot of automated processing, so things can happen much more quickly and can in a much more streamlined way. But in the future, maybe you can go through that process once. You take full ownership of your token that represents your KYC and AML, and you can send that out to people when they need it. So you don't have to go through the process multiple times, and you can provide it sort of instantaneously. So another interesting sort of benefit there. The second thing I wanted to sort of talk a little bit about was democratization. I mean, you only have to look at financial markets globally, and this sort of graphic shows the different types of or parts of the financial market system, and the sum total of those is about $1.3 quadrillion. So, it's a large marketplace, and that's traditional financial markets. Once you add in all those interesting new asset classes that tokenization can open up to investment, the market becomes even bigger. But actually, we're already seeing tokenization take place. I mean, there is a way to go, but in most of those areas, all shown in yellow there, tokenization, there's evidence of tokenization already taking place. So, it is beginning to get a hold, and the opportunity is being realized. So we certainly see a trend towards digital, that 1.3 quadrillion traditional markets becoming more digital, and the $2.5 trillion crypto digital world. Well, it may not be that figure today after what happened yesterday, but certainly that will grow. But we are certainly seeing a trend to digitization, and also the sort of democratization side of things, providing new ways of companies to get access to data, for example, to capital, for example, and providing new ways for investors to get access to investment opportunities. I mean, currently, if you look at the illiquid end, the sort of private market end, if you want to invest in a private company, you're going to go to the company directly to invest, or it's difficult to invest in private companies, and when you do, there's little liquidity after the event. If you want to trade out, you're going to have to find a party, sort of bilateral trading. Certainly in the semi-liquid side of things like hedge funds, you're going to go through subscription documents to invest in a fund, and then you're sort of tied into the redemption cycle. But the more liquid side of things, I mean, you do have secondary markets. There are public markets for stocks to trade on, obviously, and you can go through sometimes multiple layers to invest internationally through, domestic brokers, and then out internationally through local brokers in other jurisdictions to get to secondary markets. But the advent of tokenization can really change all that, and I guess this is just kind of streamlining things. We kind of see all types of instrument from the illiquid end all the way up to the liquid end, investors being able to actually either trade on secondary markets directly themselves, or potentially through a broker, because some prefer to do it that way. But it's a much more sort of democratized access to assets globally in a much more streamlined way. In terms of accessibility, I mean, for companies, certainly sort of the digital route opens up new opportunities. Sort of digital primary markets can serve all types of company, small, medium, and large, in a much more efficient way than traditional markets maybe can. And similarly, on the secondary side, sort of bulletin board, auction type markets, as well as sort of full-blown publicly order board markets, all of those digitized, natively digital, serving all types of company by size. but there's benefits for the existing market participants too. I mean, for brokers, for example, tokenization is sort of allowing them to offer access to new types of assets, for interesting things that are being tokenized. It's allowing them to serve their clients with new investment opportunities. It's allow them to be, be more competitive, maybe against some of their competitors in the space, and open up new revenue streams, allowing people to invest in new and interesting investment opportunities, and also get involved in digital markets, providing liquidity, such as market making. So interesting benefits for the sort of the existing institutions, and there's certainly evidence that adoption is really growing. I mean, there's just a selection of headlines there from all across the world that new regulated markets opening up to serve institutions such as Archax, and also a lot of the financial institutions getting involved in the digital and crypto space. And we certainly see a sort of a roadmap of tokenization at the moment. Most of the action is kind of at the illiquid end, where bringing liquidity to illiquid assets, opening up assets that are hard to trade to more investment opportunities, and really the benefits there are across the board. Access to liquidity, new ways to raise capital, and more efficiency. As you kind of move into the more semi-liquid markets, the benefits decrease, but they're still there. I mean, certainly for capital raising and efficiency. And then if you move finally into the liquid end, publicly traded securities currently, they don't really need access to more liquidity, and they don't really need access to new ways of raising capital, but the efficiency gains are huge. So we kind of see this as a liquidity spectrum as well as a market timeline, and the action sort of starting towards the left at the minute, but certainly moving rapidly towards the right. In terms of interoperability, I mean, the new digital ecosystem, is slowly evolving. I mean, it's a nascent market, but it's growing, and there are people sort of building out the infrastructure required, from price discovery to providing information services and transparency of using immutable data sources, providing new ways to deliver exciting new products, capital efficiency, reducing balance sheet provisions, for example, and then the whole area of custody and settlement is emerging and building out, and sort of settlement finality coming from the leveraging sort of blockchain technology too. So it's an exciting ecosystem, but there are challenges. I mean, it's an early stage market, so will there be liquidity? Will market makers get involved? I mean, that's why I think it's important for markets around the world to work together to ensure liquidity pools are linked and leveraged to a great extent. Regulation is clearly a challenge, and I'm going to touch on that a little bit in a minute. Interoperability, another challenge. With all the different blockchains, different protocols, the different sort of standards that are being used, a challenge there, and obviously the whole ecosystem needs to evolve and emerge, but which is underway, but and growing, but yet to sort of fully come to full fruition. But there are some interesting projects. I mean, we're part of a thing called FinP2P, sort of, which is an ONERA sort of initiative, bringing sort of the marketplace together, connecting different blockchains together to allow tokens to shift from one chain to another in a relatively seamless way. The focus of this initiative at the minute is bringing sort of technology providers together, bringing marketplaces together, bringing financial institutions together, and serving the sort of the private company world with connecting everyone together for private market usage. And they've got some great names signed up, and I say working with a number of technology providers shown on the left, and some of the custody and platform providers on the right, and with a lot of the financial institutions involved in this process too. So initiatives like this will certainly help sort of on the interoperability side. one of those sort of things I highlighted was regulation, and that is a challenge. I mean, we're based in London and regulated by the FCA. They have a fairly clear policy on crypto, on digital assets generally, from cryptocurrencies, which they see as unregulated, along with sort of things like utility tokens, electronic money, so stable coins come under e-money regulations here in the UK with the FCA. But then as soon as the token is asset backed, as soon as you're tokenizing an asset, then that is viewed as a security, and then security tokens and digital securities fit into that part of regulation. However, that's just the FCA, and different regulators around the world have different ideas around this. I mean, I know, certainly in the eyes of the FCA, a security is a security whether it's digitally native as a token or not. Whereas in some parts of the world, the digital nature is actually a distinction between traditional and new. So it's a challenge. And I did a quick sort of search on the internet, and I found 321 financial regulators around the world. So if each of those has a slightly different view, then that is a challenge for tokenization. How do you navigate that sort of that regulation matrix? So certainly challenges ahead. Finally, just wanted to touch very briefly on decentralized finance, just because DeFi is, such a hot area at the minute. I mean, you only have to look at the number of entities involved, from exchanges and sort of tools for asset management, the whole infrastructure of it and services, and then things like stable coins. A lot of exciting things going on. These slides probably go out of date every day because there are so many different players in the space. I mean, just looking at the Ethereum DeFi space, and sort of carving it up into the different areas around financial, there's a lot going on. I mean, you only have to look at the non-custodial services and some of the opportunities they present. I mean, if you're holding dollars at the moment, in a bank, a traditional bank, then the interest you're going to get is not particularly great. And if you converted it to USDT or USDC, as shown on this slide, there are some interesting rates, 14, 15% there that you could get just by, converting your dollars to a token form. However, the big question I think around DeFi is, should it be regulated? Are a lot of the activities that are going on there arguably should be regulated. They do fall under regulation, and the regulators tend to catch up with the sort of the innovators in time. Certainly, we believe that there are some interesting models where sort of leveraging what's being pioneered in the DeFi space, but bringing a regulation to it, maybe operating in a walled garden. A walled regulated garden is an interesting way forward. That's pretty much it from me today. Just sort of summary around Archax to leave you with. We're based in the UK, FCA regulated, exchange, broker and custodian, building out a sort of a primary market to help firms raise money in a digital way, launching secondary markets to allow them digital tokens, security tokens, digital securities to trade in a regulated way, a regulated custody service for both tokens and fiat cash. We're big into ESG and certainly work with all the issuers that come to list with us on their ESG ratings and helping them offset. And we're in the process of expanding our offerings into e-money. And again, the idea of sort of walled garden stablecoins and leveraging some of the DeFi space in a regulated way is really interesting for us too. Thank you very much. That's
there is one question for you, Simon.
Sure.
Yes, it's from Brett, and he's saying, do you see your role as disintermediating existing participants, for example, CSDs, or offering a better operating model to those parties? Do you have a 1-minute answer?
Yeah, I think we see ourselves as sort of revolutionizing the way entities like that operate, sort of bringing the benefits of, so not necessarily stripping out all the intermediaries. I mean, there may be some that that are no longer needed, or maybe their roles change. So I think, a lot of the functions will remain in place probably because they do need to operate, but the way they operate will improve by leveraging sort of tokenization and blockchain technology, and maybe their roles change slightly. But no, I don't believe everything is going to disappear overnight for sure.
Okay, that was a great presentation. Unfortunately, we had some problems with the slides, but I can promise everybody that we will do our best in our editing session to edit this presentation so that you get everything in it, and we will send out links so that you can watch Simon again at home at your convenience. Thank you very much, Simon. Thank you for joining us.
Thank you. Thanks. Yeah. Bye-bye.
Yes, bye-bye. Everybody, please join us at the next session. It begins in 30 seconds.